Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we continue to see this rollover in the market. We watched the market trade yesterday. It was one of the wildest days I've seen trade for a while. Started off in a weaker tone, but rallied early in the session, making a high and almost getting to an R2 number, sold off, went to new lows, came all the way back, made a new high in the day, and then there was Chairman Powell talking, and he spooked the market, focusing in on the Fed and the bond market for the last week or so, and this will continue to be a focus as we go forward. But basically, all of this volatility was being generated by just the algorithms trading. And then once Powell came out and is worried about inflation, folks started thinking about, will they tighten? Is there going to be some event that will cause them to tighten the market or back off on purchases, do something? And they're really running out of tools to deal with this situation. They're trying to jawbone the markets, which is a very usual tactic that the Fed has used forever. So if they can affect market sentiment just by talking, they're going to do that first before they have to do anything. But we did see the Fed continuing to concentrate in the 2 and 5 year purchases. 230 spread just hardly moved at all. The 1030 spread moved a little bit more and flattened a little bit. But for the most part, we're seeing rates back near where they were at the 161 spike, with the 10-year finishing at 155. This is going to be a really intense challenge of this 161 level. If we penetrate through there, we're going to see much higher yields, and therefore we're likely to see lower prices in the stock market. Now, we did see the Dow get a bid yesterday. Gold, just about everything was under pressure. So I'll go through a lot of details, setting up the end of the week as we go through the technical section here in a few minutes. But one of the big events that happened, which I expected to happen, I did a brief live stream for about 37 minutes in the final hour of trade yesterday. I discussed that I thought it was likely that I was going to see big liquidation in our short-term database, and that indeed happened. We had over 2,900 sell signals, only 130 buy signals, and the percent bullish dropped down below 22%, which is the next key metric, and I'll cover all this in a minute when I go through the database. But this sets up the tone for a full liquidation mode, and we're likely to see this thing get even weaker. And as I always discuss on my Friday videos, our intermediate models actually run on Friday night, and we're likely to see some pretty decent selling come in on the intermediate models. Now, they're 79% bullish right now, and I'm expecting to see them back off maybe to around 72 to 68. Don't expect it to go much more than that, but there were a lot of patterns that have been demolished this week as we watch the markets decline. As you recall, we started off on Monday, looked like we're going to rally, and then everything turned south from there. We're just continuing to see weakness even in the overnight trade coming into Friday morning. There is material news coming out. We have employment numbers coming out. That's expected to show a slight uptick in unemployment from 6.3 to 6.4, and we're expecting to see 170,000 new jobs. Now, if you look back on the ADP report on Wednesday, it missed substantially. It came in at 117, 150 to 180,000 new jobs expected. It came in at 117. So that usually doesn't have a lot of correlation if we see weakness come in on these numbers. In the past, we've seen bad numbers equal stimulus, which equals markets rallying. In this moment in time, we're not likely to get any stimulus. We know what the stalemate is once again in the Senate, and we know exactly what's going on, and they're not going to be able to get this thing through. There are going to be a lot of compromises made before we'll get a bill out of the Senate. So expect to see any thoughts of stimulus, at least for the moment, will be tabled. We won't see. Let's go ahead and take a look at the charts and see how they're setting up for Friday and how the end of the week is likely to affect as we move into the rest of this month. As I review the WaveTech database, we did see a substantial amount of sell signals. As I mentioned earlier, we get 2,947 sell signals, 132 buy signals, an extreme negative ratio, and the percent bullish has dropped down to 21.61%. This is a substantial situation. As I talk about all the time, there's some metrics that I always watch on the database, 27%, then 22. So we've taken out 22. This suggests that we're likely to go into a June-type liquidation. Now, I've talked about this several weeks ago as the database was rolling over. We were at 71% bullish on a short-term basis, and we're seeing this thing roll over below the 22%. Last time we went to 8%, and the markets got to an extreme. We'll see how this one plays out, but there is a lot of dynamics that are flowing around a lot of symbols here. As I look at the weekly database, what we're seeing here is we're 79.95% bullish right now, and what this tells us is that we're likely to see a substantial amount of intermediate trades be liquidated on Friday's run. So this runs after the market closes on Friday. This data will be out over the weekend on Friday night, and I'm expecting to see at least a move back to around 72, possibly 68%. If it does come in lower than 68%, that will be a bit more negative as we come into next week. There's still an overall intermediate uptrend that's in place, and it will take a number of weeks to completely be dismantled if we're going into a major correctional phase. For at the moment, I don't think that's where we're going when I go through the technicals here in a few minutes. But I do expect to see a fair amount of selling as we come in to next Monday. As I review the S&P, overnight we did see the market trade down toward S2 at 37.24. The low was 37.21. We're only down about 6 handles right now, so we've rebounded up back towards yesterday's close. We did not get an STX buy signal on the futures, and we did not get an STX buy signal on the cash. I'll cover that in the SPX review here in just a minute. The PPMs are not accelerating at the moment, but they are in trend mode on PPM 1. Let's go to the SPX and take a look at that. As I mentioned yesterday, the STX number is 3764.57. We went out at 3768.47. This is right on the level that we would expect to see an STX rebound. But as we look at the market grid for today, we're going to see that the S1 is 3751. That is going to be most likely, we're going to see an S1, maybe an R2, that's 3804 to 3751. If we do take out 3751, then we're going to be looking at the 3732 possibility of going to an S3 if this market cannot get any bounce at all. But this overall action on the overall action on this market is very negative, but we also have gotten to an extreme, and we're likely to see some stabilization today. But the real analysis is on the weekly chart, which we're seeing a substantial breakdown as we're moving toward that 21 period moving average. Now it's at 3690. As we look to next week, it is rising at 0.38. This will put it around 3705, 3708. And what that tells us is that we traded down at yesterday's low at 3723. That's going to represent, for the most part, a hit of the 21 period moving average. This will be the first time that the market has done this since we go back to last October when we saw that sharp decline. The PPM is up at 0.38, which is bullish enough that suggests there's only a 40% probability to close below that 3690. I suspect we will remain above that, and that will be the primary demand line, and we should hover above that and probably trade next week between 3690 and 3821 on the upside as far as the weekly charts go. The next market I'll cover is the NASDAQ futures. They were down to 12,304. They've rallied about 120 handles off of the low. They were down well over 0.5% earlier in the session, so we are seeing some recovery. I do expect to see them rally back toward the 13,292 level. I do expect them to rally back toward the 12,557 level, which is R1. So far overnight, we see the market trade below S1 and not quite to S2. So look at R1 at 12,557 as a possibility. If we get through there, we could go back to 12,671. Now, as we go to the weekly chart, this is, again, a big story, because what we're seeing here, and I've talked a lot about this, is that the big stocks, the Teslas, the Apples, all the big tech stocks have rolled over, and we're definitely seeing this huge rollover pattern happening, and we're trading below the 21-week moving average right now. Now, that number is at the moment at 12,558. I talked about that on Monday night's video, that we would probably decline to there. Well, we've went through that. The low so far this week, 12,304. We traded down to the STX number at 12,343. We went just below that level, and now we're seeing a bit of a rebound. My expectation is that the markets will try to get back above the 12,588 level, remain above the 21-week moving average. Now, the PPM 2 is at 0.27, so that is trend mode. There is about a 60% probability for it to remain above 12,588, so today is likely to be a rebound market. If it does not rebound, and if we take out yesterday's low at 12,304, then we'll have to go to the monthly charts to pick up some numbers here. And the monthly charts suggest that there is some support below there. 12,134, 11,895 would be the next numbers in play. Also, the 10-month moving average, I discussed this on Monday's video, is 11,897. That's going to be major support. The PPM is up 2.50. There's only a 10% probability for the market to trade below that level. We're within a couple percent of a major low in this pattern, but that doesn't mean we're going to reverse and go into all-time new highs. It just means we're finding support here. So there is some hope here as we come into early next week. This 11,897 number is going to be rock solid support. The final market that I'll cover tonight is gold. Gold continues to trade lower. We saw a sharp sell-off again yesterday. We did trade down to the 1683 level overnight. Around 1673, 1665 should be the extremes that we're going to see in this pattern. But the PPMs are trying to turn up on PPM 2, which is a positive situation, but the pattern suggests that we're going to stay within the grid, so there's going to be substantial resistance up around the 1748 level. In fact, that's likely to be around 1728 to 1748 is going to be major resistance. As we go to the weekly chart, what we'll see here is that the weekly grid has penetrated the S2 number at 1692, almost to the S3 number at 1673, and with the low of 1683 and the last trade of 1694. So this market is continuing to be in a lot of trouble. There is a lot of downside on the weeklies, and the only hope is that the short-term charts actually will stabilize this market, or otherwise we're going to see further lows and potentially going into the 1500 handle if things continue like they are. I'll take a quick look at the monthly graph. I'm somewhat surprised as I discuss this that we're likely to hold the 1733 level, which was the 21-month moving average. PPM 2 is up enough that that's going to act as what I call the demand line. So 1733, we're likely to get back towards that level over the next. S1 is 1692, S2 is 1652, and this is where most likely we could see for the month. That would be the extreme. And then 1748, 1764 is going to be a major resistance point for the month of March. This will complete the video. Thanks again, everybody, for watching, participating in the live streams. I'll talk to you on Sunday night. Have a great weekend. Hey, everyone. Thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.